Let's get to the business news now with Giles Beckford. Well, the first hit to economic growth from the COVID-19 pandemic has been confirmed. Gross domestic product, GDP, has fallen 1.6% in the 3 months to the end of March. So, Giles, this is obviously the beginning of the slide down. How bad do we expect it to get?
Well, I think this confirms that we are in a deep hole, and the figures for the 3 months ended June, so we're just coming up to the end of the second quarter. The broad range of estimates is that the economy will shrink by another 15 to 20% in that 3 month period. Now, that, of course, captures virtually all the lockdown period and then some of the easing of the restrictions. But it will confirm, although we don't need any confirmation, we can say it for sure now, the economy's in a deep recession. We are likely to stay there for at least the next year or more. It's going to be quite some time. But, big parts of the economy, tourism, foreign students, those sorts of things, they're still lost to us with the borders being closed. That's 5-6% of GDP straight away. And then with people being nervous about their jobs, because we expect to see unemployment rising, possibly up 8 to 9%, then we will see people being nervous about spending. People will be nervous about perhaps selling houses or buying houses. Businesses will not be wanting to invest. They'll be cautious about their money. I suspect that we will start to see a wave of business failures. Now, there may not be big businesses, but there will be businesses going under who just can't sustain the borrowing, the debt, the lack of cash flow. So all of that is for grim reading, which we'll get to see in some detail in 3 months' time at the end of September. But let's just take it for granted that we're in the mire because of the pandemic, and we're likely to be here for a while.
So, okay, we're on the mat and for some time, but the bounce back, is it expected to be slow? I mean, I saw some forecasts saying by 2022 we should be back to 4.5% unemployment. So is it going to be a long road back or not?
Well, I think you throw your data at the board or you flick through the telephone directory and just pick your numbers, because frankly, we don't know. We're in territory that we haven't seen in decades, and the shock to the economy is likely to be the biggest next or this quarter that we've seen in more than a century. We do expect in the third quarter, that's the 3 months to September, to see a reasonable bounce back in activity. So we'll then see growth for that quarter alone of perhaps 10, 13, possibly 15%. So that's part of the background, the easing of the restrictions coming into play. Of course, we won't know about those figures until the end of the year anyway. But the point is that we've taken a significant hit to significant parts of the economy. It's going to linger longer. There are those who suggest that we might see a return to positive annual growth, perhaps by about this time next year. But to get back to where we were before COVID-19 hit the economy, then 2022 is an optimistic bet, I think, in many people's minds. We could be talking towards 2023 before we start to see us actually making progress beyond the pandemic.
So does this mean that the government and the Reserve Bank are going to have to, keep throwing everything at it?
No choice. I mean, the words of Grant Robertson and Adrian Orr, they're almost like the Top Twins when they were singing early on in the pandemic. We'll do whatever it takes to keep things going. That means the Reserve Bank is going to keep its money printing, its bond buying program going on. $60 billion is the limit at the moment, but we won't be surprised to see it rise to $90 billion perhaps by the end of the year, and possibly up to $120 billion going into next year. The government, on the other hand, who are having to do the real heavy lifting, doing the stimulation, the infrastructure projects, the support of business, the lending programs, the tax breaks that are being given, all those sorts of things, the government will just keep funding that through borrowing, remembering that Grant Robertson has $20 billion from the budget that's uncommitted at this stage for further programs. The significant thing, I think, in many people's minds will be what steps it takes to support businesses and employment once the second round of wage subsidies, the second wage subsidy scheme comes to an end. That's in September towards October. From that point of view, that will be the significant thing when the government starts to, or it will be looked at for the programs it's putting in. People want to see targeted spending. But if it means spending, then spending they will. And I think we just have to say that the government and the Reserve Bank, they're two of the forwards in the front row.
Shall we take a brisk tango through the market numbers?
Well, we've been playing snakes and ladders on the share market in recent days. Yesterday, we were scooting up 3.5%. That was after we'd taken a fair few days' hits. We're down the snake today, down 109 points, just under 1%, 11,225. On the currency market, 64.5 US cents, 93.7 Australian, and just over 51 British pence.
Thanks, Giles. That is our business editor, Giles Beckford, joining us live from our Wellington studio.